By the way, I don't judge for that. I understand why people feel compelled to do it, but I do want to make this statement. If you feel compelled to lie to your financial advisor, you're making a bad financial choice. Welcome to episode 57 of the Money Alchemist Podcast. I'm one of your hosts, Ben Jones.
And I'm Brent Gargano.
Today, we're going to talk about using AI as your financial advisor. The big question everybody's wondering, are financial advisors out of business? It's an open-ended question.
We're going to investigate.
Not yet, but we're going to investigate that a little bit later. But as we always do, first, let's go for some updates. So what's occurred over the past 2 weeks since last time we were here together? One of those things is bond markets are out of control, if you believe what you read on Twitter, at least. They're out of control. So the 30-year Treasury spiking up.
Over 5%.
Yeah, over 5%. First time since, I think, 2000-something, 2007.
Government bond.
Yeah, Well, who would have thought that a entity that is almost $40 trillion in debt would have to pay a higher interest rate to sell said debt? So, the real reason behind this is really you, consumer. It's because we're buying too much stuff. We can't stop going to Costco. The PCE, and which is personal consumption expenditures. This is the preferred inflator that the Fed watches. Is just it keeps moving up. It's because we continue to spend money. We go to Costco, we go to, any restaurant. Everything seems to be jam-packed. Every time I drive anywhere, especially if it's at like between the hours of 3 to 5, the roads are jammed. Stock markets at all-time highs. What's very interesting, we talked about this when was it? A couple episodes ago, I think. We talked about the Michigan Consumer Sentiment Survey.
Yeah.
Here it is. I put it up on the screen. It's at all-time lows. Lower than it's been since the oil embargoes.
Crazy.
Lower than it's been since the dot-com bubble, or the dot-com bubble here in 9/11. Lower it's been since the great financial crisis. Lower than COVID.
Yeah.
Apparently,
Unreal.
People preferred being locked in their homes and the prospect of death over whatever it is, whatever this malaise is today, the K-shaped economy, as they've called it.
Yeah.
So what do you make of this?
Oh my gosh. You definitely feel this right now. I think as a finance guy, it's like if I go out and talk to any individual on the street, they're like angry that the stock market's at highs.
Yes.
They're furious.
Yeah, you actually got cussed out the other day.
I got yelled at for saying the stock market was doing well. The person was like, "Why do you think the stock market's at all-time highs?" And I said, "Well, earnings have come out and they've been really, really strong. I mean, Q1, we talked about this last podcast.
Here's the earnings chart right here.
Yeah, Q1 earnings were expected to come in at 13% year-over-year growth, and they came in at like 27. So yeah, it turns out when the S&P earnings grow really fast, like that has to get priced into stocks. But you would have thought I was like, taking some strong political stance or something just to say the market's doing okay.
Well, it's because people have an opinion on something and they don't like to be proven wrong. Even when they're faced with irrefutable data, they still stand ground on their opinion because it justifies the way that they feel. They don't feel great. Nobody feels great that gas is over $5 a gallon, that mortgage rates are over 6%, that, food, like buy steak, it's like $38 a pound to get a ribeye. Like nobody feels great about that. So you're looking for someone to blame. You might be making a good amount of money. People are making more money now than ever. But a lot of it's leaving their pockets more than ever. Right. And they pay more attention to the latter point. It's the budget outflows that hurt, the income not so much. The income feels good, but then you're also like, the higher your income goes, the more taxes you pay too, which people don't feel good about. So, I think people just are skewing the way they feel about things to the negative a little too much, and social media feeds into that too. Everything's so hyperbolic. Like I was talking earlier about the 30-year Treasury rate. Let me pull that back up on the screen here. 5.14% year to date, and you think that's the end of the world. Yeah, the bond market. Literally, there's some guy I follow, some analyst I follow on Twitter, and he said central banks have lost control of the yield curve. I'm sorry, 0.25% increase does not constitute losing control. Now, just to help people quantify that, bond yields and interest rates and prices move inversely.
Yeah.
So for every
if you bought a bond when interest rates were 4% and now they're 5%, your 4% bond doesn't look that great anymore.
No, it doesn't. In fact, so the 0.25% decrease has weighed about 6% on the 30-year Treasury. So the 0.25% increase in yields has resulted in a 6% decrease around and price decline.
Like if you owned 30-year bonds before the most recent increase in interest rates, you would be down. Like, oh, Brent, I can't lose money on a bond, right? Yeah, well, you can.
Who in the right mind is lending money to the government at 5% for 30 years? I think that's insane. I don't understand that. I never will. But
I mean, I if you look at it right now, it doesn't look so bad. I mean, inflation's at, let's just say 3%. And you've got a yield of 5%, that's 2% a year real. I would say as an asset allocator, that's not bad, but you have 30 years. I mean, 30 years is a long time.
I know. That's what I'm saying. I guess it would be like pension funds and whatnot. But
yeah, maybe.
Well, moving on from that, it kind of related is Kevin Warsh was finally confirmed by the Senate. So he's got a big job ahead of him. He's got a steepening yield curve, and the Trump admin wants him to cut rates.
Yeah.
But here he's looking at inflation. The PCI I think came in May at a 3.8%, highest since June of 2023, I believe. So he's looking at accelerating inflation. And a president that wants him to cut rates. So also too, he's apparently, I don't play inside baseball too much at the Fed, but the board is fracturing. So the last vote, was the first. Usually the board
multiple dissents.
Yeah, the board votes unanimously on things, but there were multiple dissents, and that kind of sets the stage for some uncertainty into the future. Like, what is the Fed going to do to address this problem? Really, investors don't know. So that's why I think that that's another reason why bond yields are
well,
selling
and Stephen Moran, who is one of the most dovish on the Fed board, he's out, and Powell is sticking around.
Yep.
So we've got Jay Powell sticking around on the as one of the Fed governors until this lawsuit from the Trump administration is gone.
Yep.
So it is.
I heard it was dropped. Is that true?
I don't think so.
Okay.
I don't think so. But the bottom line is, and what the market really has been trying to wrestle with over the last few months is like coming into the year, the expectation was for continued Fed cuts.
Yes.
And like now, I think the expectations for a hike are actually higher than the expectation for a cut.
Yes.
Like, what does the Fed do in this situation? It is a very peculiar situation that they're in, with inflation spiking, employment, maybe weakening, right? And then, I mean, you can't lower, Fed generally raises rates when inflation is higher to try to tamp it down inflation, but you don't want to raise rates if the labor market's weakening because it can weaken the labor market further. So you're kind of caught in between a rock and a hard place.
Well, I actually wrote about a lot of this over the weekend. Let's talk about labor markets real quick. I looked at the Bureau of Labor Statistics. Now, granted, I call it the BLS, the Bureau of Lies and Statistics.
Yeah.
Because a lot of it's so manipulated, like these seasonal adjustments.
And then we get like a revision 8 months later.
Oh, my God. Yeah, I don't know what you make of it, but I think what you can do is kind of look at the general trend and garner some truth from it. And if you look at labor markets, they're softening from the hiring peak of the COVID era, where there was tons of cash circulating. That's what you see at this peak right here. But things are, they're slowing down, but they're actually better than they have been on average.
How long is that chart? It doesn't really tell me much.
It goes back, let's see, each of these is a March. So this is March 2026. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, more than 10 years. So it's like 15 years maybe. Yeah.
So this was COVID basically, and we're still in this downtrend.
It's taken, anybody can pull this. It's taken directly from the U.S. Bureau of Labor
Look at
Statistics.
the line for professional and business services.
Yeah, they're actually, I should go to the interactive one. You can click all these individual ones and you can see
on and off.
Information was down, but professional services, business services, or this is retail trade actually, because people are going out spending money.
Oh, retail trade. Okay,
Yeah.
So professional and business services is the light green. Okay.
Yeah, healthcare was up, education was up. So but the bottom line is, on the whole, hiring is slowing down, but it's still relatively robust. So we're not seeing massive.
AI hasn't taken everybody's jobs yet.
It would be easy to argue that this is still a slowdown from the COVID hiring frenzy.
Yeah,
we're still slowing down from that. So anyway, last thing we can talk about, which is your 60-minute review, which I felt was really interesting.
Do you watch 60 Minutes?
I do every now and again, but only when it's like a hot topic.
Yeah.
You know?
Yeah. Well, there's something about like that tick, 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 tick.
Yeah.
I don't know what it is about it, but it's like Sunday night, I hear 60 Minutes. I really like it. But in any case, 60 Minutes last night had a story on something that I've been watching for the last few months. And I just think this is a pretty big topic for discussion. It's prediction markets.
Yeah.
And essentially the integrity of the prediction markets. So 60 Minutes was all about, I guess, in some of these recent war operations, there's pretty strong evidence that people were trading ahead of these things.
Yeah.
Like military personnel that had information were trading ahead of these invasions and whatnot. And I guess the government doesn't like that. So now there have been some action taken against some individuals, and it's raised this whole question of like, how do you regulate inside information when like the inside information is like what Bad Bunny's first song is going to be at the Super Bowl?
Yeah.
You know, like somebody knows what the set list looks like.
Yeah. The Bad Bunny's managers.
Yeah.
You know, how are they not making money on that? And there's no laws set in place to prevent insider trading on that sort of thing.
The CFTC the securities laws that we have right now weren't really built for this. And it's just all these, you can make, I call them wagers because this really is like gambling. I mean, it's not investing by any means. And so, but like you can wager on like anything. I was in the 60 Minutes episode. They even talked about a wager on Kalshi on whether Jesus was going to come back in 2026. I mean, you can literally put money on that.
Why would you even bet on that? Like, what's the advantage? Like, it's like betting on Armageddon.
Yeah,
you know?
I don't know. It's just the point is you can take anything now and effectively make it a two-way bet. And I just think this is a slippery slope because at a certain point, like they had a story in the news on the program about a journalist that had reported a story where like the story said that no missiles hit I think it was Israel and people were survived. Well, apparently there was some wager on one of these websites or one of these platforms where there was $22 million betting that a missile would strike. And because the reporter reported no missile struck, like this guy was getting death threats to change his story to say that the missile struck.
Yeah, it's insane.
You know, so it's just like, and he was not, I mean, he not only did he get death threats, he got bribes. Like, hey, I'll pay you money if you change your story. Like, think about how screwed up. I think that
how do we get in that position to where we get bribed?
No, I don't want anything to do with it. I think what I've been fascinated with and what I don't know the outcome here, but like since AI has really become a thing, I just think there's so much, I think it's become very valuable to be able to determine authenticity. Mm-hmm. Yeah. Like I don't know how this gets regulated over time, but I really do think that there needs to be like a watermark system or something on some of these things to determine what is real and what isn't.
Well, now you're kind of talking about digital ID, and that's been a whole topic of discussion. And there's all these, points around privacy rights and whatnot. And is anonymity a right? So that goes beyond today's scope. I don't know if we should get into all of that, but something does need to be done about it because what you mentioned is really scary. These like unintentionally designed assassination contracts, as an unintended consequence of this stuff. I mean, that's real. I mean, people do crazy things for money. But one thing I gotta wonder is like, at what point can you just blame the gamblers? Like, people taking the other side of these trades are the ones giving the money to these inside traders. Like, why are we even doing this? Really, the problem, I think, is gambling. It's not so much. I don't want to get into it.
Yeah, I don't know what like social good is being provided by these. I
don't see any social good at all. It's just a giant race to
maybe like a little
cash.
bit more fun when you're watching sports or something.
To me, I find these sports betting too, like FanDuel, Poly Markets. I find it to be these are predatory businesses. They're preying on people in desperate positions. Yeah, there's a few that are just having fun. They want something that's more engaging. It's like, really? I mean, why do you need something more engaging than the athletic event itself? Why do you need to have money on the line? To me, that seems insane.
I mean, I can see the fun in throwing a few bucks into the thing and having entertainment money.
Yeah, you can also see a little bit of fun in doing a few lines of coke. I mean, come on, it's a slippery slope, and there's a lot of people that are mishandling it.
Yeah.
I think that at some point as a society, we need to question the ethics.
I think if you are going to do something like this, you put $20 in. I mean, that's why I denoted it's not like investing. I mean, these aren't assets that appreciate over time as the money supply grows. These are contractual bets. I mean, really.
Yeah. All right. Well, let's dig into the how we're going to maintain our jobs as financial advisors.
Yeah.
Because right now, I'm sure everybody knows this. You assume this. It's like, why do I need a financial advisor when I can just query ChatGPT?
Totally.
By the way, I noticed that you call it chat now. So is that the new?
I don't know.
Yeah. Does everybody just call it chat?
It's easier to say than ChatGPT.
Yeah. So we'll call it chat moving forward. It sounds cooler. But
Claude, chat.
Yeah. So what
Grok.
we did is we took a couple real life scenarios and we ran them through 4 different AI tools. And Brent and I are going to give everybody our feedback on it. Like, what's the quality of advice given? And then also, too, how realistic is it that people can use an AI system as their full-time financial advisor? Like, what are the benefits of doing that? What are the cons of doing that? So, one thing I wanted to put in to prime this conversation was something that my wife gave me. My wife uses Pinterest a lot, and she just scrolled across this on Pinterest, and she sees this financial advice, these financial advice adjacent related posts from time to time. And this is one that she came across this morning. Never put anything in your name, which, by the way, appropriately colored here in red. Definite red flag when you hear the term never. It's like, there's only a few things that you could say never do.
Hard to speak in that kind of
to qualify a statement with that is very, dubious. All right. No cars, houses, leases, contracts, or loans should be in your name.
Your name.
Yeah, NAM. There is another.
Sorry.
Here's to own nothing, control everything. My living trust owns my holding LLC, which that statement doesn't make sense to me, which owns my operational LLC that controls all my assets like cars, yada, yada. It's basically like, it sounds smart to the layperson. You and I read this and we're like, oh, that's bullcrap, but what does the layperson do?
This sounds like a lot of complexity.
So what I did is I took this and I just uploaded it I did Grok, I did Claude, I did ChatGPT, and I did Gemini. All right. So first up was Grok. I said, I saw this on Pinterest today. Is this good financial advice I should follow? Grok just outright says no. No, but here's some pros and cons. Here's some I find this to be the best of all the responses. But it was just because it gave you what you needed right up front, but then filled in the details.
Well, I think this is to me, this is one of the most powerful things that AI does is it helps you sort through the BS.
Well, exactly. And I think that's the point I was going to get. You jumped the gun here.
Sorry.
That's all right. So this is, Claude was much more balanced in its approach. This is partially grounded in real strategy. So it doesn't come outright and say, this is bad advice, but it kind of leads.
It does, LLCs exist for a reason. They are there to limit your liability from the corporation.
And Claude goes over all that. So, but it's much more brief, and it does give you the red flag here. This is a social media finance post, the kind that sounds sophisticated but exists to sell courses. And that's, I think, hitting the nail on the head. So Claude does a good job. I give both Grok and Claude an A+. Grok gives you a little bit more detail. ChatGPT was also very good. Very detailed as well. I would put the response equal to what Claude's has. This is a mix of real legal structures and internet finance exaggeration. Very true. And then Gemini, couldn't get a response out of it.
I kind of sat there and spun
multiple times. So Gemini gets an F out of everything, but not because of the quality of its response,
really get a way
but
to
it did
measure
give me a response. So what I thought we could do today is let's take some like real life examples. This is obviously kind of like a very colorful example because it comes from some hyperbolic post on Pinterest that someone, I don't know what their agenda was with it because it has misspellings and all sorts of things in it, but obviously it was some sort of phishing campaign to get you to click and to learn more or to sign up for some sort of newsletter. But what I thought is we could go in, act like real people and ask it a question. So, give me an example of a question that you would come. If you don't have any top of mind, I got a couple up in the queue here.
Yeah, I mean, go ahead and use. All
right,
use anything you've got.
Let me copy what we got. I got a lost place in my phone.
While you're doing that, it is timely here because there's a recent article out of the Wall Street Journal, and this article was, I asked ChatGPT to manage a stock portfolio, and here's how it did. They started with, I think they fed it that they are 30 to 35 years old. Their goal was to have growth. They had a long-term time horizon, 3 out of 5 risk tolerance, $1 million to invest. And it started out, basically, if you read the article, you'll see more, but it started out giving pretty reasonable advice, although she notes that the math was off. She told it how much money she wanted in cash. It calculated the wrong amount at the beginning. But as the relationship progressed, like it starts out really good, giving solid, hey, open a Roth IRA and invest in a diversified portfolio and da-da-da-da-da-da. Well, some weeks down the line, as she's asking more and more questions, it ultimately encouraged her to trade leveraged ETFs and options.
Yeah.
So it kind of got off the rails as time went on, was
just
the
to
challenge.
Give the listeners some context there, like levered ETFs are not really good long-term hold investments.
Terrible long-term hold investments.
In fact, one of my functions as a managing director of an RIA is we have to pretty much ban levered ETFs in all of our client portfolios. Like you just can't buy them because they're just such terrible investments generally. They're not meant to be bought long-term. They're meant to be traded.
And that is because, just for the listener that doesn't know why, that is because the way they mechanically work is they have this like resetting structure, which over time costs the investor money.
Yes.
So like and I've seen this time and time, not to get off on too long of a tangent, but time and time again, I've had prospective clients come to me and they own this leveraged ETF. And if you pull up the graph, the chart on any of these, they've always they start out really, really high and then they've gotten really, really low. And so what people go is, but what if they go back to where they were?
Yeah.
And to which my answer is, they're not designed to. Yeah. And it's just tough. So anyway, that is a common thing that I've seen.
That's a good podcast episode. We should do one on levered ETFs because I do find a lot of people falling victim to them because they just assume that if you buy the 2x S&P that you're going to get 2x return over time in the S&P.
And that's not how it works.
You
get 2x in a given day.
Yeah. Yep. That's true. All right. So back on the rails here. Here's that article you mentioned in the Wall Street Journal. I don't have a subscription to it, so I can't pull it up. But
the bottom line in the article is it starts out giving, I'll say, pretty decent financial advice. Like, the good thing about these, as we said before, is I do think, I think AI is going to be awesome for consumers and not getting scammed so much. I mean, I just think there's so much sleaziness that goes on, not just in our industry, but all sorts of places. And chat or any of these AI, they become a really, really quick place to just go and kind of temperature check, like how scammy might this be?
Yeah, and you can do it at 2 a.m.
I literally nowadays when I'm shopping in Costco, we always talk about Costco, so I'll keep up the thing. When I'm shopping in Costco, I'll pull out my phone and just pull up the AI and take a picture of whatever I'm looking at buying and say, hey, is this something that makes sense for me to buy? And it knows enough about me that it'll kind of tell me, Brent, you're probably spending more money. You don't need that. There's really not going to be much benefit. Or like, hey, that's actually something that I know is consistent with you. So it's helped me keep my spending down.
Yeah.
There's things that maybe I otherwise would have bought just because I wanted to test them out where I checked on it, I got peace of mind not to do it.
This is interesting because you've always said that financial advisors act as an accountability buddy.
Yeah.
But here you are using ChatGPT as an accountability buddy.
No, I don't know if that's exactly what I'm doing there. I think there's a level of when I'm saying that AI doesn't hold you accountable. What I mean is that when you ask AI something or you tell AI you're going to do something, if you don't do that, or if you're asking an embarrassing question, you're not like worried about
There's
the
no
judgment. There's no judgment.
Yeah, got
like
it.
when you come to me as your advisor and you spent something that you shouldn't have, like you're kind of anxious to show up on that meeting with me and talk to me about it,
Yes.
and I don't want you to be anxious. I want to be a nice person but like that anxiety is kind of part of my role a little bit, because I should be in the back of your head, for good or for bad. Maybe if your issue is you need to save more, maybe I'm in the back of your head telling you to save. On the other hand, I have clients where I tell them to spend more, and sometimes I'm in the back of their head as they're making spending decisions and they're using their money. So it goes both ways.
Have you ever had a client lie to you?
I'm sure.
Yeah.
I'm sure.
I have too, and I've caught him a couple of times. By the way, I don't judge for that. I understand why people feel compelled to do it, but I do want to make this statement. If you feel compelled to lie to your financial advisor, you're making a bad financial choice. Generally.
Well,
right.
I do think it says something about, how do you as the advisor make clients feel comfortable to where they don't feel like they need to lie to you, but at the same time, they don't, just blow they don't make bad financial choices without some level of guilt.
All right, so we got a new chat here. I'm going to use Claude because Claude's all the hotness today. I find, it's funny. It's like everybody used ChatGPT, and then everybody started using Gemini, and then everybody's using Claude now. It's like, these things are
we all
shifting like the winds. But
now we're all coders. We can all build apps.
We got a lot of clients that get stock options, so I thought that would be a good question. So here's a lay person. So let's
this is kind of like a pretty bland, like there's a lot of detail.
But this would be a question I would think an average person would ask, like, hey, my employer rewarded I misspelled it, stock options. What's the best use of the money?
Okay.
All right, so let's see what it says.
I feel like this is a pretty generic.
It is very generic, but that's where people start, right? I would think.
Look at this. It asks some.
Hey, it's a great question. It's a very great question.
Then it asks you for more information.
Well, this is actually pretty good. So, and then it takes you through a questionnaire. Like, do you have an emergency fund? Do you have some savings? So it's basically saying,
let's say strong financial foundation.
Strong financial foundation. Okay. Oh my God. I have to say, Brent, this is pretty legit.
I'm telling you, Claude's been.
Yeah. All right. So
I've been using
what's
it a
your
lot.
primary goal for the money? What do we want to do? What do you want to do with this?
I think we want to grow long-term wealth.
Grow long-term wealth. All right. Let's see. Great with a strong financial foundation. But here's the problem. One issue that I noted, and I'm not trying to pick holes in, I have to say, this is pretty darn good. Better than nothing, better than Googling. It didn't give you any context. It's like, what is a healthy cash foundation? Yeah. So it didn't say like.
You could ask that.
Yeah. That's true, but how would you know to ask that?
Yeah, there's a lot of, it's like a loaded, these questions are more loaded than you think, right? But I don't, like, to me, this is like when calculators came out, in the sense that, like, now I have the calculator to do the math for me. I love this, because to me, this is going to make advisors, clients, like, this is going to increase everybody's financial knowledge. And I don't see that as necessarily competitive with advisors. As a matter of fact, I think sometimes the more financially educated somebody truly becomes, and we've talked about this on the podcast, like, when you understand finance enough to where a lot of people make the mistake of, oh, I understand how to invest and how to save, so I don't need to pay for a financial advisor. I think people are so off base with that. I think the real value of understanding personal finance is not that you don't have to have an advisor, you can avoid paying one. I think it's that you can hire a really good one. I think it helps you discern good versus bad, and I just think this.
Well, it definitely does that. Yes, this is definitely going to increase financial literacy, which is a net positive. All right, let's read what it came up with. It says, great, strong financial foundation and long-term wealth building goal. Here's how to think through your stock options strategically. I'm just going to read the bold here. So first, understand what you have. So it basically is taking you through.
Do you have ISOs or non-qualified stock options?
Yep. So it's helping you with that, helping you look at the tax consequences, which is good. Long-term wealth strategies. So it's giving you your exercise options. So should you exercise and hold the stock? Should you exercise and diversify? cashless exercise, which is, that's great that it goes over that. And then the whole hold and wait strategy. So I have to say, I'm going to give it.
What's its bottom line recommendation?
Bottom line recommendation for long-term wealth and strong foundation. The classic smart move is exercise strategically with tax timing in mind. That's a bit generic of a response. Sell enough to diversify and deploy proceeds into low-cost index funds and tax-advantaged accounts. So it's basically saying use low-cost index funds.
I mean, I'll pick this apart a little bit because I generally think that sounds like great advice, but there's a lot of things missing in there. Like, for example, exercise strategically is very opaque. Like, what does that actually mean? With tax timing in mind, it requires some knowledge of where your tax situation is going, where it is, where tax policy might go. Sell enough to diversify. Well, how much is enough? Like measuring, like, well, okay, given what I want to do versus what might be nice to do, like how much of this do I need to, I'll say lock in. And then I'll go one step further just to get a little technical. It talks about making sure your 401k is maxed out and whatnot. And that may be very great advice, but there are rules, especially in 401k plans, that have to do with your company match, where if you max out too early, you might not get all of the company match you're entitled to. So you would want to know that before you bumped those up. So I generally think that it gave a great education about the stock options, ISOs versus non-qualified stock. That is exactly what we would cover with the client. And then we would talk about how to be strategic. Now, it also didn't talk about how to strategically exercise ISOs, which there's tax treatment, that there's favorable tax treatment on ISOs if you exercise them properly.
Yeah. Key on that,
and you have to exercise.
Has to be properly. So this is the point I'm trying to make. Now, the genesis of this whole entire topic was this USA Today article, courtesy of Nick Hutchins, our producer here.
Thanks, Nick.
Or I guess is producer the right title? Director. Yeah.
The audience advocate.
He's the guy that does all the stuff behind the scenes. So without him, none of this is happening. But he shared this article from the USA Today talking about how there's a TD Bank study or survey, it wasn't a study, how many people are using AI systems as financial advisors. You know the percentage? I'll give it to you if you don't know it.
I bet you it's...
What would you guess?
Well, is it how many people that are using AI, or just like how many people in general?
People in general.
I would think it's pretty close to the total amount of people using AI. I would think if you're using AI, you have asked it a question about your money.
Okay. So, but you don't have like a percentage guess.
I don't know. Okay. I mean, what's the adoption rate on AI at this point?
It's a lot, but I don't know that number. But I'll just give it to you. I don't
like
need to be around the bush. No, it's close. 55. Okay. 55% of respondents. Do you know what percentage of people use financial advisors?
Maybe 40.
It's like 30.
30%.
Yeah. So already AI is...
Well, it's a lot lower barrier of entry. It's so much easier for me to go and ask chat a question as opposed to like set a meeting with a financial advisor and explain all my stuff.
Yeah, it's
like takes me a lot less time. The barrier of entry is much lower.
I
think that percentage is going to be near. I think over time, 100% of people will be using AI to supplement their financial knowledge.
Not only that, they should be.
Yeah, absolutely.
They should be. So, all right. But let me get back into this. So, like, you were asking all these questions to add color to Claude's response. And that is the key point of the article. But what they found, in essence, is that the answers you get from AI are about as good as the questions you ask. So, you really kind of have to start from a place of knowledge in order to get a quality response out of ChatGPT or Grok or whatever it is you're using. So now there's two ways to go about it. You can either, inform yourself from the responses, which requires a lot of reading, a lot of studying, and a lot of comprehension. You still have to understand how it works. Now, fortunately, these AI tools have made it very easy to distill all that information. So it's easier now to learn than ever before, but you still have to put in the work. Or you can simply outsource to a good advisor. So you can get the gist, you can get the basics, and then work with a professional to help you refine these questions.
I'll give you a third option. I mean, this is what I would do. I would say create a prompt, something like, assume I'm really novice in this subject. I don't know exactly what you need to know about me to give me thoughtful answers on this subject matter. Please start asking me questions that would help you build an understanding of where I am so that we can get some answers, and then you just sit there and dialogue with it for a while, right? I mean, that's kind of what I've done when I train the AI, right? I would just let it.
So let's talk about that.
Walk me through it.
Why wouldn't you just do that all the way down the path? Like, why? At what point during that correspondence with the AI would you need to hire a person?
I don't know that there's any point where you have to hire somebody. Like, I think that's probably where we go, is like between the agents and the LLMs and all of this stuff. Like, I think there's a good likelihood that over time I'll be able to chat with that. And then as it makes recommendations, it's going to be able to be like, hey, do you want me to go open a Fidelity IRA for you to get this started? And it will like go do it. So I actually think that our job is going to be much less focused on the actual doing. I also think our job is going to be less driven by like the actual textbook advice themselves. Like I'll pick on, well, maybe I shouldn't pick on there was a financial planning software that's out. And I looked at this software last week, and it's a very simple software that kind of outlines the clients and what assets they have, what insurance they have, what liabilities they have, but it doesn't show you any kind of projections.
Yeah.
And the rep that was selling the software was arguing with me that, well, these, even though there's no projections, like these are all the accounts you would have conversations about. Like, oh, you can see their savings account and it has a lot of money in it. Like, are they using a high yield savings? Oh, their investment account, they don't have a Roth IRA. Should they have that? And I looked at him and I said, here's the problem. AI is going to be able to do all of this. AI is going to be able to look at your savings account and say, hey, why don't you have a high yield savings? You should have, like, these are kind of simple calculator based answers. I think what is going to be harder, and where, at least for somebody that works with clients and gets to see how clients progress through the planning process, projections are really important, because the advice that we give is more than just like, oh, you need high yield savings. Oh, you need an estate plan. Oh, you need to allocate this, invest differently. Like, the act of planning, we've said this time and time again on the podcast, the act of planning helps people self-reflect, and it helps people think about what's important to them and prioritize. And I think that the planning itself helps people live a better life outside of just like optimizing the accounts. So I just think that where we're going is like AI is going to do a pretty good job of optimizing, like actually within the planning that we do. I'm convinced that you and I are going to be using AI.
Yeah,
to
we
look at the
already do. I mean, I don't know about you, but
yeah, we're definitely, I mean, but like it's going to be more in like the planning software that we use, like right now, the financial planning software, it has all the inputs and stuff, but it's not really AI itself. Like there's going to be AI that's plugged into the financial planning software. Yes. And I think it's going to help us deliver better financial plans, get more, just more effective. Like, it's going to be able to look at more information and compress it much quicker than we can. And then that allows us to focus on the human aspects of the planning, like what things give you purpose in life. Dennis Mosley Williams was on our podcast when we were at the Financial Planning Association's conference.
Yeah, that episode should be out, so check it out.
Yeah, and he talked all about how like we have to really start thinking about how we become guides. Like, we're no longer just solving.
He called it the transformative economy. So the services, the professional services that are going to be left standing are the ones that have figured out how to help transform their customers.
And I think that's what all these people that say, oh, I understand how personal finance works, so I don't need an investment advisor. I think there's so much that they miss just in terms of like the soft benefits that come from having a plan on file, having somebody other than you or your spouse that knows what your plan is and where you intend to go and can, like we talked about earlier, hold you accountable. I don't think those are going to be so easy to replace with a robot.
Well, yeah, you also got to think too, there's a trust gap there, even though these systems have the access to the world's information at their fingertips. There's certain biases that they have that we don't quite understand.
Well, like that one answered and said you should buy ETFs. You and I have talked about...
Well, I know it said index funds.
Index funds, yeah. Said buy index funds. And you and I have talked about index funds versus actively managed funds. And I would say that's a whole... I mean, you could go ask advisors and they could have good debates on the merits of both.
It's not... I like index funds. I don't want to put it out there that I'm like some anti-indexer.
But AI has a bias.
I also, yeah. I believe that you should consider the world of investments available to you, and there's pros and cons to each. So
but AI didn't even offer the alternative of an actively managed mutual fund.
And I think that there's always going to be some form of distrust, like a little bit of doubt. Now, some people who are really highly informed, there's a lot of people out there that don't think they need financial advisors, and they probably don't. Now, could we optimize their life? Yes. So should they have, could they improve their situation if they worked with a financial advisor? I believe yes. But the word need is too strong of a word.
Yeah.
Yeah. They don't need a financial advisor. So I think a lot of the people who have that mindset where they want to be super private, they want keep costs to bare minimum as possible. They really obsess over that, budget optimization. Like, hey, I'm going to keep all my money. I don't want to pay anything out, and I'm happy doing everything myself. AI is going to be one of the most beneficial things for that individual because you really don't realize what kind of box that you're in until you get that proper information that teaches you things that you didn't know, because you don't know what you don't know, right?
Yeah.
And I think AI is really good at informing you on things that you don't really know.
Well, I'll give you a real life example of this. I had a client that came to me. So this particular client, I've gotten to know them over the years, and one thing I know about them is they value their time really, really highly. So they want to make sure that they're using their time on their business, their family, and they want to eliminate all of the other waste. That same person, probably, 6 months ago, something like that, was talking to AI and had this idea to invest in a multifamily investment building. And they were going back and forth with the AI, doing all this great chatting about how they could buy a multifamily and the right strategy to buy it and how much to rent it out for and what that meant their cash on cash return was and blah, blah, blah. Had them all the way down this thought process of here's how much money you're going to make. This looks like a pretty good investment. Here's how you're going to go about doing it, blah, 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 blah. Client sends me an email. Hey, I've been chatting with AI. I just wanted to run this by you. I get on a meeting with the client and I said, hey, this is all great. I follow the return, the maths, so to speak, but I know you and you've already told me that your time is your most valuable thing ever. Do you think this is additive or distracting with that? And by the way, this person's starting a business. The business could be very successful. So it's what does this do? I mean, if you're distracted doing this rental thing, what does that mean for the value of your business? And the lack of time you're able to spend there. And just by the time we kind of talked about it, it seemed like a no-brainer that this shouldn't happen. You shouldn't buy a multifamily rental and try to manage that at the same time as you're setting up your business, especially when you value your time above all else. So it was just so interesting because the AI was just very agreeable. As he went through, and it answered all the things correctly. It was giving him what he wanted to hear, which was oh, the rental looks great. And it wasn't wrong. It just didn't know, like you said, it didn't know what it didn't know. And what it didn't know was what the client actually cared about.
The context it didn't have is that human beings only have 24 hours in a day.
Yeah.
So the AI just assumed, oh, you've got infinite processing power, and that's not true. So it basically said, it motivated him, go ahead and do this, but it didn't forecast properly that this was going to quickly overwhelm your client.
Yeah, so it's just, did it do an okay job of laying out some of the details and helping make sure that the client kind of understood the basics of what they were going to do and so on and so forth? Yes, but it didn't ask the one question that really mattered, which is how does this compete with the other priorities that you have?
Yeah. So bottom line, Brent, we could go in and query another question, but I think that we've gotten down to the gist of this episode, which is AI is incredibly powerful. People should be using it. You should absolutely be consulting it for these random finance questions that you get.
Spot check stuff with it. I mean, I don't have. I'm sure most all of my clients have thrown some of the financial advice that we provide into AI. I'm also confident that if they do that, they're going to get an answer that says, hey, your financial advice that you're getting isn't bad. And I actually look at that as great because that reinforces to the client that they're getting good work. Help.
That's actually a good tip. So if you're working with a financial professional, even if you trust them quite a bit, you should still run through their recommendations into an AI tool that just to help either build confidence in the recommendation. Because one problem that is out there is that people get frozen in indecision because they lack the confidence. So that might give you an additional confidence boost that you need to go and move forward with a recommendation, but it also kind of helps you weed out the charlatans. So you were mentioning the whole your dad attending some sort of like presentation for dental practices. So apparently there was this webinar for dental plans where this person was advising that you take out a bank loan, a lump sum, apparently, unsecured.
You take a ton of money. You have the bank lend you money to buy life insurance.
Which to me is like double downing on dumb. Like, don't do that. Now, there may be some random scenario out there that I just can't think of off the top of my head where that makes sense. But by and large,
to me,
it sounds
sounded like
somebody
somebody trying to sell insurance to people that couldn't afford insurance. So they said, well, just borrow the money from a bank.
Yeah. So that, AI.
I asked AI, by the way. So I threw that quick because I got the call and I just, again, I haven't heard of premium finance life insurance. I'm pretty sure it's scammy.
Yeah.
And so immediately I pull up AI and I throw it in. Hey, tell me a little bit about premium finance life insurance. What do I need to know? It gives me some of the bullets. And I simply asked, what's the worst case here? And the worst case is that you end up with no life insurance, a tax consequence, and you owe the bank all the money. And, so it was kind of like, just, when your worst case is that you lose a bunch of money that you didn't have in the first place, maybe we should try to avoid that.
I mean, it's sad though that person apparently does well enough to justify these webinars where it even caught your dad's attention.
I think that person is the person that's going to get crushed over time by AI.
I hope so.
Like we said at the beginning, I think AI is awesome. As a consumer, it's amazing. Because I don't care whether I'm consuming financial advice, if I'm consuming stuff at Costco, if I'm doing work on my house, whatever it is, I can use AI to spot check and make sure that I'm not getting ripped off. And I think that is one of its highest and best uses. It doesn't mean that I don't need a contractor. It doesn't mean that I don't need a financial advisor. It doesn't mean that I don't need to go to Costco, but it does help me sort through the BS.
Yeah, and I do want to end on this note, this topic at least. We do have the tip of the day coming up, but as a function of AI, I have not lost a single client. Our practice hasn't lost a single client. So, and I have to wonder why. Why is nobody firing me? Because if you can do it at a fraction of the cost, why wouldn't you? Why not just send your advisor a Dear John letter and say, hey, look, no, don't take it personal, but I can save a lot of money. And I would say, I can't blame you. So I wonder why to myself, why do clients continue to work with me? And it's because of quality conversations. I'm just human and AI is not. It really amounts to that. And it's not just, you mentioned the accountability function, which true, that's there, but it's a lot more than that. There is a deep, unspoken, hard to describe, it's hard to articulate what a relationship actually is. When I get a client that calls me, and it feels good to get that call. It feels good for them to tell me how good their kids are doing and what career that they're pursuing now, and how excited I am to get them started on their journey to building wealth. And and it's also too struggles. I had a client who took care of her mom for more than a decade, and her mom struggled with Alzheimer's, and finally ultimately lost her battle to Alzheimer's, which that's an unwinnable battle. But the amount of emotional drain as a result of that, it was incredibly valuable for this person to have a sounding board, someone to talk to, someone that could empathize. So I ultimately land on that. That's the reason why clients haven't left. It's because they desire that human connection that you just can never get from a computer system.
And life is such a shared experience. I think we're always looking for camaraderie and commiseration. And I just think with money, it's so weird because we just don't tell a lot of people about our money. Even a lot of your best friends don't know your financial situation. Maybe your spouse knows it.
And that's for good reason, because there's all sorts of weird consequences that come about from being too transparent about that.
Yeah, sure. But I guess my point is, when I'm your financial advisor, and one of the coolest things about our job, I think, is that we get to work with clients over a long period of time. We get to provide advice that turns them in a direction that ultimately they get to see the benefit and we get to watch them see the benefit of over time. And I just don't think there's anything. It's so cool to be able to go spend time with another human that you've been talking to for a long period of time that has seen the benefit of the advice that you're providing. They've got lots of money. They're doing things they didn't think about. And you get to like share in that with them and they have somebody to commiserate in that. Like, I just think that that's actually like a really, like we have the coolest job ever because you get just really special relationships with people. They don't have these relationships with really anybody else in their life. And I think people want, like when you get a big bonus at work, what do you want to do? You want to tell somebody about it, right? And then what? You can't tell your buddies about it because like they're getting bonuses too, you know? So it's like, but you get to tell me. And I can look at you and say, hey, I'm really excited that you got that big bonus. Like
you are. It's
you don't have to feel guilty around me. Like I'm excited you got a lot of money.
Yeah, absolutely.
You know? Let's get excited about it. So anyway, I just think that relationship, at least from the advisor side, is so much fun.
Yes.
I hope the clients value that the way that I do.
That's a great summary. And I think on that note, we can shift over to the tip of the day because I got no better way to recap the conversation than that.
Great.
All right. So as we do every 2 weeks, we come up with a tip of the day. Now, I guess it's a tip of the by week. You know, what do we call it?
Tip of the episode?
Tip of the episode, I guess, you know. But what we try to center this on is like how to better save money. But I also might from time to time come up with like a product that's just so compelling that, you know, you're
a paid sponsorship.
Yeah. None of this is paid. This is just things that we've encountered, products and services that either save you money or they're just such high quality that they improve your overall life experience. And I haven't been to the dentist in 7 years.
What?
I mentioned that on the episode.
You haven't been to the dentist in that long?
No, I can't say that anymore. I went last week.
My gosh.
And I'm not
I'll never look at you the same way anymore, Ben.
I'm not afraid of dentists. It's just, to me, it's an inconvenience. And why go out of your way?
You only get one set of teeth, man.
Yeah, but my teeth are fine. I don't have no cavities or anything like that. Anyway, the dentist said the dental hygienist and the dentist both agree that I have beautiful teeth, so it's all good. But it's the main reason is because of two things. One, it's an inconvenience, and two, I just don't know what the costs are. I'm like, okay, am I getting myself into an $800 bill or is this like a $200 bill?
This is pretty cheap.
Yeah, but I don't know. I don't know that. So
ChatGPT could have told you.
Well, yeah. Anyway. The point of, and this also ties into what you were saying earlier, which is like you do benefits review with your clients and you always kind of, you know, it's not that you look past the dental plans, but you're never impressed by them.
Well, it's just not like medical insurance could be $1 million issue, right? Like medical stuff can be big. Like dental insurance, a lot of times you're talking thousands of dollars maybe.
Well, my whole tip of the day is my wife went and looked, what is the best dental plan for us? And she looked at insurance plans, but then she also looked at these dental maintenance plans that you can get directly with your dental office. So this is basically just hiring your dentist on retention or retainer. So we paid like $1,000 to a local dentist, and it covered my entire family, all the cleanings, I think 2 cleanings per year, x-rays, the whole 9 yards. The only thing that was extra were like, you know, if you wanted to get like Invisalign or something, you know, some sort of like
stuff.
Yeah, or ortho stuff. That's obviously extra. But, you know, for us, that was a no-brainer because we would take my son to the dentist. One of my kids has got this like enamel issue where, you know, we are really like, we have to take him to a dentist twice per year just to make sure everything's
So you take him twice a year, but you haven't gone to 7.
But every time we would take him, it would be like $800.
That's why you're scared.
Yeah, and we're like, gee, Merry Christmas, man. What is this? So it creates like a stable price. Overall, it's not that it may be lower if you shop around, but it created a stable, dependable price, and it also removed the cost fear of going to the dentist. Like that was one of my issues. It's like, I just don't want to pay the money. But if I'm already paying the money, kind of like your Mike's car wash example.
Yeah.
You go to Mike's Car Wash because it's sunk cost. You might as well. So anyway, my tip of the day is ask your dentist if they have one of these dental maintenance plans. If they do not, go and shop and see if there's one that does. I found that my wife found, not me, that a lot of these dental offices don't even offer these plans. So I would recommend shop for one that does. Not much different than how you and I charge for our services. It's just, it's essentially a retainer fee. So anyway, that's my tip of the day. I thought about doing a couple Father's Day tips, but I guess we're going to have another episode before Father's Day, right?
You're better at the calendar than me.
Yeah, well, when is Father's Day?
Don't ask.
It doesn't matter, does it?
The only one that matters is Mother's Day.
All right. Well, with that, I appreciate everybody for sticking around while we discuss whether or not Brent and I are still going to have jobs in the next decade. So it's been a great episode and look forward to catching you next time. Opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Investing involves risks, including the potential loss of principal. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Advisory services offered through National Wealth Management Group, LLC.